Good morning, ladies and gentlemen. On behalf of the RBCC's patron, His Royal Highness Prince Michael of Kent, and the RBCC's chairman, Roger Munnings, a very warm welcome to the first ever Russia Talk Online. My name's Alf Torrance, and I'm the Executive Director of the RBCC. I'd like to start by thanking our sponsors, without whose very generous support, today's event would not be happening. Our Platinum sponsors, EM Plus and Nornickel. Our Gold sponsors, Agreco, BP, Raven Russia, Synergy Corporation, and Vitol. Our Silver sponsors, AstraZeneca and EM Communications. Our Bronze sponsors, Accelerate, Tinkoff, and TMI. I'd also like to thank our event partners, the Russian Embassy and the Russian Trade Delegation in London, the British Embassy and DIT in Moscow, and the Chambers of Commerce and Industry of the Russian Federation. And of course, a very, very big thank you to all RBCC members and friends who have taken time to participate in today's historic event. I hope you will agree that we have a very full and interesting program, and I hope you'll be able to join for all or at least part of today's panels. Before we get started, a couple of announcements. Throughout the discussion, I'm sure many of you will want to put questions to the panel. There is a chat function on the live stream you'll be watching, and is where you can post your questions. The RBCC team will be monitoring the chat room and will try to pick out some of the more popular themes. We will relay these to the moderators who may or may not use them depending on the flow of the discussion at the time. As normal, we will be recording today's event, which will be posted on our website next week. I'd also like to draw your attention to the pre-recorded messages on the website and in the comments section. We're ready to start today's program, and we will be starting with an economic overview which will set the scene for the panel discussions. Chris Wiefer will be well known to most of you as he's a highly respected economist who's been observing the Russo-British relationship for over 20 years. Chris was chief strategist at Sberbank CIB and held similar positions at Uralsid Financial Corporation and Alpha Bank. In 2013, he went independent, setting up Macro Advisory, and is the author of a wide variety of published articles about Russia and the wider region. Chris, really good to see you again, and we're very much looking forward to your economic scene setter. Over to you.
Okay, thank you very much, Alf, and thank you very much for inviting me to participate in today's online events. And as you say, it's my role to kind of set the stage and taking on the theme of today's event, which is never waste a good crisis, as it were. And yeah, I mean, and that's something that I've been kind of talking about for a while with people about Russia, where Russia is right now. Because, well, as Alf mentioned, I've been over 20 years in Russia. This is my fourth crisis. And what I've observed in previous crises is that they do tend to kind of push the government into taking actions and making decisions which are generally more positive for either the business climate or the economy afterwards. And usually these are actions that have been talked about as being a good idea for a long time, but there was never any need to do them. And it's a bit like paraphrasing Churchill comment about the US in the Second World War. You know, Russia is a country that does the right thing when there's absolutely no other choice, but it does tend to use crisis because it's forced into it. And if we look at the last crisis, say 2014, 15, 16, the sanctions oil price crisis, you know, from that we got the fiscal rule, which now makes the budget a lot less dependent, a lot less vulnerable to oil price volatility, and other measures, national projects, for example, which we'll be talking about in the panel later today, and some other kind of measures which I think generally will be more positive going forward and possibly wouldn't have happened unless we had a kind of a crisis situation. So it is, I think, a valid theme to talk about Russia using crisis. So let me put up the a presentation which I will use just to keep us online and on track, and you know, look at where Russia's position is today. And you know, first thing is, again, as I mentioned, this is my fourth crisis since I came in early '98, and this time around Russia at least has got money, it's got options. In the previous crisis there was always an element of, you know, having to pay down debt, having to kind of manage the money, and that impacted how the government reacted to different crises. This time it is different, i.e. there is a difference in that there is money and there's a low level of debt, which means therefore that there are more options, and the government therefore can focus more, hopefully will focus more therefore on strategy to pull out of this, rather than having to kind of crisis manage day to day. That's not the case. Also, again, we're reflecting on Russia. I know the COVID rates are going up, and it seems like it's getting a little bit more serious than even before. But when you compare with other countries in Europe, in the US, etc., it's a relatively calm situation in Russia. Hopefully that will remain, but it's not kind of causing instability, etc., as we see elsewhere. So again, government is not facing that pressure. We are, as we see in the slides, pulling out of the worst part of the economy. There's a definite recovery in place, but it's important to bear in mind, least anybody is going to accuse me of being overly optimistic. It's important to bear in mind that what I'm talking about recovery is simply getting back to where we were before COVID and before the oil price. Of course, in Russia, nothing ever happens in once. We have a double whammy always. This time it's COVID plus the oil price collapse, as previously it was sanctions plus an oil price collapse. So we are simply talking about getting back to where we were before this particular kind of phase of crisis started. This is not kind of any message that Russia's now going to move off in a new strong growth direction. That's still to be proven. We're still hoping that will be the case. But really now all of the narrative is simply about getting back to that kind of, which was relatively low level of growth. Russia clearly will need investment to move higher. And challenges, just to put them up there, these are clear. We see them and hear about them time and time again. It's good to kind of reflect on them. It does not mean it's negative. I'm not saying these are the challenges that will never be overcome, and therefore Russia will always be kind of in this rut, as it were. They're simply identifying what are the issues. And the good thing is, in our discussions with people in government and ministries and administration, these are also the issues that they're very well aware of. That's not to say they'll deal with them effectively, but at least, over the last 20 years, there's been a real change in attitude. 10 years ago, you wouldn't get anybody to even accept there was a problem in some of these areas. Now they're on the table, and there's discussion is, how do we deal with them? That's, again, a long way from actually dealing with them, but at least they're on the table. Which is a positive, and clearly some issues like demographic decline or boosting SMEs will be extremely difficult. Others maybe in terms of economic efficiencies might be better. A national project clearly is the one we will watch. But there are opportunities in terms of the never waste a good crisis. I've mentioned the first one. The national development goals are now more pragmatic. It's less vague, less political, maybe is a better way to put it, and that's good. National projects are being altered. They're also being made more pragmatic. When national projects was announced first, it was really unrealistic. It was like, oh God, here we go again, another 5-year plan. And when you talk to people in various ministries, they would reflect that, saying it's not going to happen in 5 years. Best we can do is show progress in 5 years. At least now, with this opportunity, I guess, with the crisis, it helps. It will help redefine national projects to something that's more deliverable in terms of the human resources, the administration resources, as well as the financial resources. So it's a 10-year program rather than a 5-year program. And the weak ruble, we'll talk about that. It's pros and cons. There are clearly lots of negatives from a weak ruble. It creates uncertainty. It's bad for investment. It's very bad for importers, of course. But it has helped certain segments of the economy. It's helped push diversification. Russia is now becoming a major agriculture exporter. Okay, let me redefine that. It's a major exporter of certain products, for example, in grains. Russia will be the world's biggest exporter of wheat again this year. But we're starting to see exports of meat products, of other processed food, which wasn't the case a few years ago. It's starting, and it should grow. The market opportunity is clearly in China, the Middle East, and Africa, and the weak ruble helps that considerably. It also helps with budget management, and again helps with that kind of easing the kind of, or avoiding financial pressures. And agriculture, food processing I mentioned, ESG, I know the next session will deal with that. I would argue, I guess, that E and S are now more on the table. G, unfortunately, is still not there, and so long as the Bering's Vostok case is on the table, nobody will believe that Russia's making progress with G anyway. So that's clearly is an issue. And at least now we're starting to talk about ecology, carbon. They're on the table. Again, that's not to say that there's a plan, that we can expect these to be, highlighted. What we have seen typically over the last 20 years is that when, President Putin or others highlight something new, something that needs to be addressed, it typically disappears then for a couple of years. It seems like there's a lot of internal discussion behind closed doors, and then we get, it returns in some sort of a form of a strategy. And that's what I would expect with regard to ecology, carbon reductions, etc. It's on the table. It has to be. We see what Europe is proposing with regard to carbon taxes, for example. It's serious for Russia. So it can't be ignored. But it'll probably take a couple of years to get some sort of a clear strategy. But again, I would put that into the opportunity category for foreign companies and foreign investors. Coming back to where we're at, this is the graph showing the recovery from the worst of the crisis I mentioned. This is a leading indicator. It's a very good proxy for GDP. And we can see up to August, which is the last number, it's pulling up from the depths of April. And it has allowed the economy ministry, for example, to say they're going to upgrade their forecast this year. They're now looking for a contraction of 3.9. We've always had 3.5 for this year. I know some people are -3, etc. But it's a lot better than it was. Is the main message. You go back in April, there were people talking about maybe even 10%. So Russia has managed this kind of downturn relatively well. The government has been criticized for not doing enough, but it has applied the money at least in the right way to prevent kind of a major downturn or a major increase in unemployment. These are the reasons. So the oil price certainly has helped because, again, it allows for spending. The low interest rates, again, hurt the ruble, but has eased pressure. And, of course, debt service restructuring, holidays, whatever you want to call it, have actually helped as well, keep businesses. Weak ruble, has helped certain sectors of the economy. State support, COVID, confidence, etc. So you can see it there. By the way, this presentation I'm making available to RBCC, and anybody who wants it, or Alf can share it as he wishes. The oil effects, this is also a factor in the numbers, the headline numbers. And when you're looking at Russia, of course, always bear in mind, there's a mathematical effect in Russia that's not really as evident elsewhere, probably is in Saudi or some other countries, but not really in Europe or the UK. And it means that, yes, oil is now kind of less of a volatile factor in your budget, but it's a major factor in the economy and the headline numbers because of trade and flows. And the other mathematical factor, of course, is the high percentage of state companies in the economy and the low percentage of SMEs. So you get recovery in big state companies. It affects the top line, but it doesn't reflect the broader economy. So you can have a minus 20% or 20% contraction in SMEs and still have only a minus 3% in the headline because the big companies are doing well. So it's distorted. Oil has that effect. And the only reason I put this up is to remind you that Russia participated in the OPEC Plus deal from May the 1st and slashed oil production by at least 2 million barrels. That's 2 million barrels that came out of exports that hit trade, it hit fund flows, it hit the ruble also. From August the 1st, that has eased a little, but it really won't start to ease until January 1st. So again, there's that mathematical effect on a year-on-year. That's keeping the headline numbers down, but it will improve when we're going into next year. So again, another reason why you'll see the headline numbers improving faster than maybe you'll see the real economy improving. Business confidence had jumped up a lot. You can see that we just had the manufacturing number update yesterday for August, or for September, sorry, apologies. And you can see it's back down below 50. To remind you, a level of 50 is important because a reading below 50 indicates that business owners expect their business to contract, and that affects their behavior. They're not going to invest. They're not going to, plan, as it were, for expansion. whereas above 50 is expansion and it's positive. So it was above 50 for manufacturing, it's now down below it. But then again, of course, just looking at that graph on the left-hand side and the bottom, it's been below 50 for some time. It's not just the effect of COVID or oil price. There's been a lack of confidence in Russia for at least a year. The services side, though, is kind of more interesting, and that one did jump up a lot towards 60, and that has always been above 50. So again, it reflects the fact that you have companies like Yandex, online businesses, e-commerce, all doing very well. That's kind of in services. Manufacturing, maybe it's more oil side, maybe in other manufacturing sectors, less so. Again, that's something that wouldn't surprise us when we talk about the Russian economy. The consumer is very important. It's very important for politics. It's very important for the economy, because we know President Putin has really talked a lot about his commitment to rebuild income. So if you're in the consumer sector, it's important because you have, obviously been badly impacted this year, and the consumer, see, minus 23% in total in April. If you were selling vehicles, that was minus 70%. But the prospects for next year do look better, and it's partly because of Putin's commitment to continue focusing on trying to rebuild real disposable incomes and to improve the position for households and people. So housing, affordable housing, those projects will remain on track, and we'll get more money if you're in that business. People will have generally maybe more disposable income as we go through next year, again, which help maybe durable goods that are affected this year. So it does look a bit better coming into next year, and it's partly because of Putin's commitment, and clearly that's good politics as well as good economics. And that's another thing that I've learned over the last 22 years, is when something ticks both boxes of being good politics, whether it's domestic or geopolitics, and is good economics, you know it's going to happen. If it's missing one of those ticks, yeah, less so. Anyway, so it's not a bad picture, and you see wages in real terms only dipped in 1 year. So this is a real focus for the government. On the monetary side, we'll go through that, but again, it looks like we've now probably reached the end of the rate cuts. It's still possible we get another 25 basis point cut before the end of the year, but Governor Nabulina, at the press conference a couple of weeks ago, she had a big lapel pin with a pause button on it, so that's probably a clear enough message that we're near the bottom or at the bottom. But the low interest rates will stay next year, and then only go back up to what they've now indicated is the neutral rate of 5 to 6% only when the economy allows it. So we're a couple of years away from that. Inflation is something to watch. It is not a big problem for the economy. Again, if you remember back in 2015 when the ruble collapsed and inflation went up to 16 or 17% and food inflation was 27, that's not going to happen. The economy is completely restructured, much more domestic focused, much greater control over pricing. But it'll probably still get up above the central bank's target, and that's really is the effect of the weak ruble. So it's now 3.6% in August. Central bank, we're hoping to keep it well below 4% this year. It'll probably creep up above it. We're thinking maybe 4.3, 4.4. So again, nothing disastrous, but and really shouldn't cause any major problems. The ruble, you need to do this every day, so we're a couple of days old. The thing about the ruble is, if we look at the graph on the bottom left-hand side, first of all, you could say the ruble correlation with oil is less than it used to be. But big oil moves do move the ruble. So we saw the big oil price collapse in the early months of this year, massively weaken the ruble. Then as the oil price was recovering from the low point, we saw the ruble also recovering down below 70 in early June. Then the politics kicked in with sanctions. Just to remind you, of course, in late June was all that furore about allegations that Russia was paying bounty to target U.S. service personnel. And Lindsey Graham and other senators talking about sanctions from hell, kicking Russia out of SWIFT. And since then, it's kind of almost been the driving force. We've had continuous allegations of Russia interfering in the election or warnings about it. We've had Minsk, we've had Navalny. So it's politics that's been driving the oil price, not the oil, been driving the ruble exchange rate, not the oil price. Up to the beginning of September, for example, the oil price had rallied 70 to 80%, I think up to 60% from the 1st of May to the end to last week. The ruble is weakened. And again, without politics, today, if we did not have that sanctions risk, our model shows that the ruble would be trading at 68 against the dollar. It is trading at 78 entirely because of fear of sanctions and politics, and that's not going to go away anytime soon. We've seen the central bank making some interventions in the last couple of days, mainly by arm twisting big exporters to bring their foreign currency back, to raise demand for the ruble. That's helped a little, but really until we get past the election in the US, will we see the ruble kind of reverting to a more, fundamental value. So,
Chris, 2 minutes, please.
Yes. So let me just, but anyway, so the ruble obviously is important, and we could talk all day about it and say difficult call because we were now into the element of sentiment. So national projects we'll talk about later, so I'm not going to go through that, but that clearly is the plan for the long-term recovery. In the immediate term, as of this week, this phase 2, the spending phase of the recovery plan, is $100 billion. Again, that will help the economy. You can see, number one there, real income growth. That's a big, a part of what I was saying about restoring incomes. It'll help the consumer sectors a lot. There'll be a lot of incentive, I think, given to companies who can build export-focused facilities here. We're already hearing that regional governments are doing deals for companies to expand manufacturing so that they might export their product. These are the areas and technologies that I would expect. Again, I'm not going to labor that. It's in the presentation. We all know government finances are very good. The one point I would say is Putin is insisting on the extra spending being paid for with debt rather than running down the reserves. And what I've heard is his argument is that if you run up your debt, you're under more pressure to repay it quickly. If you dip into reserves, the pressure is less to rebuild the reserves. So, again, it's consistent with what you know. But good financial position. And then finally, last 2 slides. This one is our base case. I'm happy with the GDP number and the retail sales, the budget balance. Obviously, the oil price average and the ruble are the 2 factors that, frankly, we're having to make best guesstimates on. But you can see, really, the picture here is that, yes, this is assuming no second lockdown. If we get a second lockdown, then this is what you're going to get. This is the kind of pessimistic scenario where we get a second lockdown and the economy dips down in the next few months, and that pulls into next year. So you essentially add at least 6 months to what I've been talking about if we get a second lockdown, maybe 9 months. And of course, similarly, if we get an oil price collapse, ruble at 82, I mean, these are the scenarios which we use a lot. So then I will put the bottom line, finish with that slide. It's not in or facing a financial crisis, but it has a growth problem. And that's clearly what needs to be addressed even before the crisis, and that's where we'll be when we get out of the crisis. But we have seen time and time again, the government is forced into taking positive actions, dealing with outstanding issues when it comes to crisis. I don't really see any reason why it won't be this time either. And I would focus a lot on national projects and recovery programs as having more emphasis when we come out of this. Sanctions is still a big issue and remain so until the end of this year. Then hopefully we'll be less focused on that. But it will be the driving force of the ruble. So let me finish at that, Alf, and hand back to you. And as I say, that presentation and a few more slides that are in it, they're with you, so you can share or put on the website as you wish. So thank you very much.
Chris, thank you very much for a great scene setter, and that lays the ground perfectly for the 4 subsequent panels. Yes, we'll make that presentation available individually, and as I mentioned at the beginning, the whole webinar will be on our website next week. Ladies and gentlemen, that's the end of the introduction. We will now have literally a 5-minute pause while we rearrange for the first panel, and I hope as many of you will rejoin us in 5 minutes' time. Thank you very much.